What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis and we'll look at all of the indices, the VIX and Bitcoin. We're going into a brand new trading year for the year 2022, so it's going to be a lot of importance to understand what current market conditions we're going into next year and what to expect in the year 2022. We'll also take a quick look at my own personal performance on how I did last year in my portfolio and talk about some of the things I'll be thinking about in the year 2022. So first up, let's take a look at the S&P 500 index SPX weekly chart. So let's crack open this chart and see what's going on in the stock market today. Alright, so as promised in the intro, we will take a look at my personal portfolio performance for the year 2021. And I'll grab a quick screenshot so I can leave out my personal details here. And you can see for the last year, 2021, I returned 51.76% on my portfolio. And you can clearly see it was a wild ride. It's not like when you look at numbers like this, it's just going up in a straight line forever. And this is why I always talk about having an objective trading plan and not just getting emotional. There was plenty of times in this market when I was down here seeing drawdowns in my account and I could have very easily got very emotional about it, and I could have strayed away from my trading plan and I could have obviously panic sold and I would not have received this amount of performance. So when you go through a stock market correction or you're going through a pullback, you need to know exactly what your trading plan is so that you can come out of that pullback at a new all-time high in your trading account. I did all of this with no options trading and no margin. This is strictly my money, only buying shares of ETFs and other things that I like to trade, and I don't bother trading options. Yes, I could have made a lot more money trading options, but when you trade options, you're taking on a lot more risk. And with that risk, even though there is more reward if you end up being right, you can also lose a lot of money. So in my portfolio, it's my personal preference to not bother with options because I'm trying to compound my wealth over the years and I'm trying to make sure that I don't lose money. Rule number one in trading is don't lose money, and rule number two is don't forget rule number one. So I just wanted to show you my personal performance so you can understand what a wild and bumpy ride it ended up being, even though when you look back in the rearview mirror, you're only going to see the year return performance, and that's really what most people focus on. It's also important to focus on the journey to get to that number and not forget that it didn't go without plenty of bumpy rides. And if you're looking at my yearly return and saying there's no way you can possibly do this in a bear market, you're right. In a bear market, I would make a lot more than this. Just make sure you have a trading plan that doesn't care if the market's going up or down, and make sure you stay objective and follow price action. And no matter what the market does, you can continue to return great numbers like this. Alright, so jumping back over to the SPX weekly chart, don't forget every single candlestick on this chart does represent one entire week's worth of price action. So 2021 is officially in the rearview mirror, and we want to start thinking about what market condition we could be heading into going into 2022. So the first thing I'm going to come out and say is that we did not have a full-blown stock market correction in the year 2021. So you better believe it's highly likely we are going to see a full-blown stock market correction in the year 2022. You really need to let that sink in because you're going to need to be very patient in this year 2022. It's not going to be the same stock market that we saw in 2020 and 2021, even though there was plenty of bumpy rides in both of those years. For the most part, if you just look at this weekly chart, it was a very smooth ride to the upside. I say smooth because it's usually a lot bumpier than this, and even though there were plenty of volatile moments, we didn't even see a full 10% correction in SPY this year. So you can clearly tell from my wave count that I think we are in wave 5, and it's just a matter of time wave 5 ends and we go through that full-blown correction. So it's going to be extremely critical to follow the price action, because by the time we see a trend shift and we lose the bull trend, we're probably already going to have done most of the correction. So the number one thing to pay attention to is going to be the very critical support trend line, which is right around the SPX levels of 4550 and possibly even a little bit lower around 4500. If we start losing that level, that will be price action, knowing that we're slicing through that support and we know we're very likely going to see a full-blown correction. So if I just take from where we closed last year and I say go down about 10% from where we currently are, that takes us all the way down back to SPX levels of 4280. If we go the full-blown 15% correction, that takes us all the way back to 4050. So 4050 sounds like it's no way possible SPX is ever going to go that low, but I'm here to tell you it is extremely likely that we go down to SPX 4000. That doesn't guarantee we won't find support before we go that low, but never rule out the possibility how much the stock market can correct. A 10 to 15% correction is completely normal and completely healthy, and it happens in every single bull market all of the time, and then we come out of the hole and make a new all-time high. So don't rule out the possibility that SPX is already topping out very early this year, possibly even the first quarter, and we're going to see a very choppy and very volatile market. However, if you don't have a trading plan, you need to start making a trading plan immediately. Don't go into a brand new year with no trading plan, having no idea how you're going to navigate the market. Your trading plan should know exactly what your percent allocations are going to be, exactly what your entries and exits are going to be, and exactly how you plan to tackle this market. Remember, you can't just assume it's going to be a smooth bull market and you're going to buy every dip and you're going to make a ton of money. Even though that does work in bull markets, this is very likely not going to be the same bull market that we had over the last 2 years. So make sure your trading plan is prepared for a bear market and a full-blown correction, because you're very likely going to see at least one of those things this year. There's no guarantee when, but we will follow price action day to day, and we will very likely see a very early warning sign that we're going through that correction. So watch the support and know that we are coming close to having the full-blown 5 waves, which means we will be due for a stock market correction. There's really no other way to put it. There's no guarantee it has to happen in the first couple of months, but it is very likely coming in the first half of the year. So don't forget my price targets on SPX up here at 47.82, 48.30, and if we continue to go higher than that, we still have the resistance trend line right around 4900. So there's plenty of resistance to the upside, but that doesn't mean we can't blast right through it, because we still do have the strong bull trend. So don't get bearish just to get bearish. Even though I am warning you about a full-blown correction, that doesn't mean we have to correct right this moment. We can still go higher before we see that correction, so stay objective and watch these very critical support levels. Another very critical support level is going to be right around 4700, because we are starting to break out of this consolidation. We went sideways and we finally broke out above that level to finish out the year, but if we can't hold up above that level, it could be one of those false breakout looks and we could be coming back down. So watch that 4700 support level, and the next level to pay very close attention to is going to be way down here at 4535. If we start losing that level, we'll also lose the support trend line, which means we could be coming back down to the 50 EMA, which is right around 4300. And obviously we can continue to go lower, just depending on whatever the stock market decides to do at that time. We always follow price action first and foremost, and then we look at the trend to give us the bias in which direction the market is likely to go. We still have a strong bull trend, so the bias is still for higher price action. So we need to see price action telling us otherwise before we start to say this bull market is correcting. Jumping over to the weekly chart of the NDX, we can see a very similar sign where we're very clearly in this 5th wave, and we're trying to figure out where this 5th wave is going to end. My price targets for the NDX are up there at 16,932 and 17,365. The resistance trend line is somewhere in between, right around 17,200, and all of these are very likely price targets we could hit before we see that full-blown correction. Very strong support levels on the NDX to pay attention to will be right around 16,300 and down here right around 15,650. If we start to lose any of those support levels in the price action, it's very likely we're starting that full-blown stock market correction. So watch those support levels very closely and pay attention to price action. You can still see on the weekly chart we do have a very strong bull trend, and there's still plenty of room in the upper Bollinger Band to continue to climb higher. So we're definitely going into the year 2022 with a strong bull market in the SPX as well as the NDX, so there's no reason to try to call a top and say the correction has to come now. Stay objective and follow the price action and continue to watch those strong support levels. If we start losing strong support, it's more than likely the correction is here, but we won't know that until we see the objective price action. On the Dow Jones weekly chart, you can see that we did go much of nowhere last year, just trading sideways and sort of chopping around in a very tight trading range. That could change because we are regaining the bull trend on the Dow Jones, and we could see we are gaining momentum. So if you see the Dow Jones starting to break out above about 36,355, that could mean that we are going to see brand new all-time highs. And if you follow my day-to-day analysis, that brings us up to Dow Jones levels in the 37,000s. If we start to lose critical support, we're going to start breaking down below 35,350, and our support trend line is all the way down here right around 34,425. If we start to lose those critical support levels, we could go through the full-blown correction, but right now the Dow Jones is still looking very bullish, and it still looks like it could continue to climb higher and form a brand new all-time high. Follow the price action and the trend, and right now they're still both bullish. On the Russell 2000 weekly chart, you can see that we don't have a bull trend, and we also don't have a bear trend for that matter, and we're still going absolutely nowhere, just trading sideways after that false breakout brand new all-time high. We broke out to a brand new all-time high and immediately gave it all back and came all the way back down to the support trend line and basically spent 4 weeks testing that support level before we started to bounce. So we need to see the Russell 2000 breaking back out above the 20 weekly simple moving average, which is sitting right here, right around 2263. The bullish breakout will be on a breakout back above 2332, and then we could see a brand new all-time high in the small caps. Don't forget about the January effect, which usually does benefit the small caps, especially because they went absolutely nowhere last year. If we start out the year with the small caps doing very well, we could see outperformance in the Russell 2000, and we actually could see a brand new all-time high by February. But we won't know that for sure until we see the bullish price action breakout and regain the bull trend. Look for the price action to confirm that we're going back into a bull market, and look for the price action confirmation breakout above 2332 to confirm it. We'll regain the bull trend shortly after, and we should see brand new all-time highs. Otherwise, look for the bearish breakdown back down below about 2160, and if we break down below that, we could see the Russell 2000 going into a full-blown bear market. On the VIX weekly chart, we can still see the VIX is getting crushed, and the VIX is currently trading below 18. The next logical support levels for the VIX will be down here at 16 and then 15, and those could be strong support levels that we could see more volatility. If we see the VIX heading down towards 15, that tells us we're going to see brand new all-time highs, so continue to stay bullish as long as the VIX is below 18. If the VIX starts spiking back above 20, you need to be a lot more cautious, and the next time the VIX closes back above about 25, we're more than likely going to see that full-blown stock market correction. So don't ignore the VIX going into next year, because if it starts to spike above 20, we could be very near that stock market correction that we never saw in the year 2021. On Bitcoin, we're currently trading just above the weekly 50 EMA, and we're currently sitting right around 47,000. You can clearly see Bitcoin lost the weekly bull trend, and it's sitting above very critical support, which is right around 45,000. If Bitcoin loses support at 45,000, it could be coming all the way back down to retest support right around 30,000. That would obviously be a bear market, and we'll see a prolonged weakness in Bitcoin if we do lose support at 45,000. To get bullish on Bitcoin, we need to get a close back above 53,000, and the bullish breakout will be back above 60K. We could see brand new all-time highs. So right now, don't get bullish on Bitcoin until it can get back above 53K, and you can definitely start getting bearish on Bitcoin if it breaks down below 45,000, because it's more than likely going back down to about 40K or all the way back down to 30K. On the ARKK ETF weekly chart, we can see ARKK is still looking very weak, and this should be one of those ETFs that will benefit from the January effect. There's a lot of these stocks that got absolutely routed in the year 2021, and they might start to see some love in the year 2022. If that's going to be the case, we should see it very early in January and February. Otherwise, we are more than likely going down for that next leg lower, which means ARKK could be going back down to 85 to 81. We'll know that because we'll lose the support level at 90, and if we're starting to get bullish, we should start to break out back above about 99 to 100. So above 100, we're getting more bullish for a retest of potentially the middle of the support wedge, which is right around 114. If we break down below 90, there's no way you can get bullish because we're more than likely heading down to $80, which would be a much better buying opportunity. You can see we have the very strong bear trend, so if we lose that support level, get ready for the next leg lower and get ready to buy much lower or short below 90. So jumping back over the S&P 500, it's very likely the year 2022 is going to be a lot more volatile. Don't expect to see the stock market screaming up another 27%, and definitely don't expect to get through the whole year without a full-blown 10 to 15% correction. I'm not trying to scare you, I'm just trying to help you prepare and make your trading plan, and don't get overly bullish and just buy every 3 to 5% pullback, just thinking it's going to be the same exact market we had last year. It's not that simple, and if it was, everybody would be rich, so don't just assume the year 2022 is going to be the same exact S&P 500 that you got last year. Do a lot of research and try to look for some ETFs that maybe got beat up last year that might do a lot better. And of course, ARKK is going to be one of those ETFs. If it starts to do great right out the gate, don't ignore that because it could be a very early warning sign that the ARKK ETF is going back into another bull cycle. ARKK is not the only ETF that's beaten up, that's only one example. So get out there and go do your research and understand exactly what you want to do to crush this market this year. One way for sure to crush this market is join Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message, and it only trades the ETF TQQQ. You can see Bank Trade Alerts is up over 14.9% in the last 3 months, and it's a very simple system to follow that will help you make profits in any market conditions. If you want to learn more about bank trade alerts or find out how to subscribe, you can click on the link in the description of the video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you have a great trading year in the year 2022, and I hope you crush this market. And as always, I will see you in the next episode.